Good afternoon, Mr. Golden is on the line. Let's discuss today about the dictionary of traders. More specifically, it will be about the terminology I use in my own analysis. As you know, there are quite a lot of them in trading, and which can be marked on the graph, but I will tell you about the main ones that I show in each of my analysis in the VIP channel after each trade session. Let's go to the TradingView platform. I already have a pair of euros, USD. We are going to analyze 5 basic terminologies. Let's start, for example, with Buy Side Liquidity, Sellside Liquidity. What is Buy Side Liquidity? Buy Side Liquidity is the level of liquidity which is formed in such a given movement. So this is the key maximum, where we have liquidity on the buyer's side. Here in this case you can see Buy Side Liquidity, to which the price was striving at the moment. This is where we have the Buy Side Liquidity. What does this mean? In other words, these levels serve as a target for the price. Accordingly, when the price reaches this Buy Side Liquidity level, we can count on the long movement to stop, or at least we'll get a backlash, as the liquidity, in this case, was depleted. Now the price will be looking for rebalancing. I think that it is clear now about the Buy Side Liquidity. This is the key maximum. Key liquidity levels that are formed at the key highs of each swing. In a long movement, the price always seeks to remove the level of Buy Side Liquidity. Let's pick another pair and see what the Sell Side Liquidity is. For example, GBP USD. Let's turn on the 15-minute time frame. And let's see here. We have good consolidation. Here you can see how the chart captured both Buy Side Liquidity and Sell Side. As you can see, our price is moving in a consolidation order, removing the Buy Side Liquidity level, which means the last high that was formed here. And we have the level of Sell Side Liquidity, for example, liquidity on the seller's side, which the price also successfully removes. So the price always moves from liquidity to liquidity. It can be from buy side to sell side, and vice versa. These liquidity levels are better used in order to have some purpose for trading. Moreover, if you open a trade in this place or in this place, you need to understand where you are trying to deliver the price. Where do you think the price will be delivered? I think it is clear with the liquidity levels. There are quite a few of them on the chart. Let's move on to the next important point. These are AQLow and AQHigh levels. What are AQLow and AQHigh? These are relatively equal minimums or relatively equal maximums. This is one of the strongest terms and arrays in trading. That is, the price always seeks to remove such levels. It is always looking for them, and it can serve as an easy target for you to find a position. As in this case, we see we have this minimum. We draw a line. As you can see, here is the data. In this case, we remove this low in a small way. So for clarity, well, it also counts as AQLow. But nevertheless, for the clarity of the picture, as you can see, we currently have lows that have not gone below this low. That is, every attempt to lower the price ended in failure. Accordingly, we have accumulated a very large amount of liquidity in this place. On the side of sellers, which is AQLow, after which we see how the price rises. And with a strong, powerful movement finds this level of liquidity under the guise of AQLow. Let's mark it. In this case, I would advise you to look for positions only in the short direction, as AQLow should definitely be removed for the price. Therefore, we should have just waited for the end of this backward movement, then enter a short position in order to reach AQLow. Let's look for more examples. Let's select a pair again, Euro, USD in an hourly time frame. I want to show you AQHigh, for example. Even here we have it. Here we have a key maximum, and let's draw a line. Here is the maximum that failed to update the previous one, and this maximum also failed to update the previous one. Accordingly, the liquidity on the buyer's side was not removed, so this level is our AQHigh level, that is, with the level of relatively equal highs. As you can see, the price removed this level of liquidity, after which it received a strong short reaction. This level of liquidity should also be removed, even at this moment. When the price could not reach this level and made a pullback, we could take a calm position from this fair value gap in order to achieve AQHigh level. How does AQHigh differ from Buy-Side Liquidity? For example, the AQHigh level cannot consist of one structural point. It always consists of 2, 3, or more structural points. That is, every structural point that approached the previous level should not exceed it, after which we have this accumulation of liquidity, which is a pretty strong level. Instead, if we talk about Buy-Side Liquidity, for example, here, at the moment, it consists of one structural point. In this case, after which the price cannot make a significantly deeper pullback. That is, even update the structural low, how it was done here, and then go pick it up. That is, Buy-Side Liquidity or Sellside Liquidity is not a top priority for price. Instead, AQHigh and AQLow are much stronger arrays, which the price tries to remove immediately. I think that's clear. And the last array I want to talk to you about is the fair value gap. Let's remove this fair value gap, for example, in this case. As we can see, we have removed the AQHigh level, after which we received a strong short movement with one candle, where we have a gap called fair value gap. This gap called the fair value gap is formed from 3 consecutive candles. That is, where we have the upper candle and its shadow, and the lower candle and its shadow. Here is this segment, which is the fair value gap. So it was not filled with previous candles. Accordingly, a fair value gap was formed, not the efficiency that the price also seeks to fill. Let's mark this. As we can see, the price has already formed a short order flow and changed the structure to a short one, after which it rose to rebalance the fair value gap, because the price always tries to balance the fair value gap in order for the trend to be strong. As we can see, the price has risen to the fair value gap, tested it. I even tested its balance. I can already see it. So the average value of this fair value gap, which serves as a complete disability, in other words, this fair value gap is no longer relevant. We may not expect to go higher. We are already looking for short positions. And again, we get a short position. Again, we get the formation of fair value gap. Short level continuation test. It works in the same way in the long direction, as there is a long flow, a strong upward displacement, a pullback to the fair value gap, and again, the continuation of the long movement. I think this is clear. More terms and more trading values you can find out in the guidance material, which I posted in my VIP channel. See you at the next lessons. By the way, we also have a Telegram channel where you'll find a lot of valuable information regarding trading. Through this channel, we provide access to our tools, the Golden Bot powered by AI, which delivers 50 to 100 signals per day with an accuracy of approximately 80% plus. A VIP channel where you'll not only receive signals but also detailed analysis of each trade, along with exclusive educational materials. Additionally, we have a premium channel where our core team offers support to help individuals become independent, successful traders. If you prefer not to learn or trade yourself, you can join copy trading and automatically copy our trades. In general, you'll find useful content, and we regularly hold contests and tournaments for our most active subscribers. Subscribe to our Telegram channel, and we wish you good luck and profit.